Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretksy. He's a Vancouver-based realtor at SteveSaretsky.com. Welcome back to the show, Steve.
Yeah, thanks for having me on.
Steve, what are the latest housing stats for October here in the greater Vancouver area?
We had kind of a tale of two markets somewhat. We had detached house sales in Greater Vancouver up 43% from last year, and then we had the condo market showing quite strong sales as well. Sales are up 13% year over year. Now again, compared to maybe a slower 2019 year, but condo sales had their best month of October since 2009. So overall, I mean, if you look at the numbers just from a data perspective, I think it's definitely turning heads in the fact that you're in a pretty severe recession right now, and that you have obviously pretty strong sales volumes. So that's kind of where we're at today. It's obviously, if you start to unpack those numbers a little bit further, it's not like 2016 where everything's going up in a straight line. You have pockets of the market, such as the downtown Vancouver condo market, which is getting hit pretty hard. And then you have, the other side of the flip coin of it, which is that, that entry-level single-family house market, is red hot. It's on fire right now.
An entry-level condo in Vancouver, what's that cost, roughly?
Like in the city of Vancouver?
Yes.
Yeah, probably about $500,000.
And in Ontario, of course, that's considered the price you pay for a detached home.
Yeah,
outside of Toronto.
Perhaps, way out in the suburb there, I suspect. But obviously inner city, definitely more expensive. I think people are looking around and saying, I don't have to be as close to the office anymore. Maybe I should migrate out where I can get a little bit more value, bigger space for less money, and that seems to be the trend right now. We're seeing the strongest sales growth right now since June is actually concentrated in Langley, Abbotsford, and Surrey. So those are your three hottest areas of the market right now. And then obviously Vancouver is kind of the laggard in that group.
And that's simply because of cost, isn't it?
Yeah, it's just cost, affordability. I think it's just overall, it's just a pandemic trend, which is people believing that they won't have to go into the office nearly as much in the future, and this has kind of changed, work from home habits, so to speak, and that's may as well move out, an hour out of the city, and if you only have to make that commute once or twice a week, it becomes much more palpable.
How does this October compare to the 10-year average of Octobers?
I don't have those figures right in front of me. I think they're up something like 30% above the 10-year average along those lines. So, yeah, it was a robust October. Obviously, I think the story since June, July, August has kind of been pent-up demand. But here we are in October, and it's becoming a story of, well, is it still considered pent-up, or are we strictly looking at a market that is facing a more sustainable demand shift here? Where we are, I mean, as head-scratching as it may be, certainly I'll be the first to admit that I was wrong. A little bit head-scratching to say that it could potentially be the start of a bull market.
Are low interest rates one of the factors here? We've never seen them this low. Yeah,
they're playing a significant shift. I think if you look at it like, on about $1 million mortgage, going from, 2.8% on a 5-year mortgage to 1.8%, which is kind of where we're at today, at about $1 million mortgage, you're saving roughly about $20,000 a year in interest costs. So, It is playing a factor. These are the lowest mortgage costs we've ever seen in our history here, and that's, you can certainly thank your central banks for doing that, and obviously it's going to have perverse effects in the long run. One of them is I think that affordability is going to remain a challenge. It's obviously benefiting asset prices at the benefit of, or at the cost of society. So that's certainly something you can get into down the road, but it's playing a factor for sure.
I think about a year ago, the provincial government said housing starts were down by a third. What's that going to do to the market in the long term? Will there be a shortage of homes?
No, I'm not concerned about that at all right now. I think that right now we have, over the next 12 to 18 months, we should see record completions here in the condo market, in the multifamily market. So we have a lot of new supply coming on. That's kind of actually helping. So we talked about at the beginning of the show, condo sales being up 13% year over year. But the one thing that's kind of much different than the single family market is in the condo market, you actually have inventory at 6-year highs. So there's plenty of new supply coming on the market that's actually there to meet that increase in sales. And that's why it's actually keeping prices in check. And actually in some segments in the condo market, I would argue that condo prices are down slightly. So, I think that we have, with the temporary pullback in immigration and the weakness in the condo market, which is deterring investors and which is, primarily impacting young first-time buyers, that there's arguably, quite a bit of condo supply here in the near term. And that's something that we'll have to work through over the next, again, 12 to 18 months. So I think that's going to keep the condo market in check. And I think that the pipeline for new construction is still quite full. I mean, I wouldn't worry about a shortage necessarily for at least another probably, 4 or 5 years.
We're hearing of multiple offers for homes in October. What's going on? Yeah,
I think it's just it's just a COVID trend, basically, where, we just have, everybody seems to want a single family house. Obviously, more space if you're working from home, also your own front door for, hygienic reasons, I guess, during a pandemic. And number 3 is the insurance crisis that's going. So that definitely seems to be a trend towards single family houses again, people wanting their own space. And so if you actually look at it, there's just 3.1 months of supply in the detached housing market. That makes it the tightest market for inventory since June of 2016. And if you can recall correctly, June of 2016 was a month prior to the introduction of the foreign buyers tax when the housing market was ripping hot. So again, 3.1 months of supply. I think the numbers speak for themselves. I don't really have to say anything else. But it's just a tight market.
We'll have more with Steve Saretksy right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Steve Saretksy. Steve, some high-end homes in the 8-figure range have recently sold. Are these sales likely pulling average and median prices higher?
Not really those ones per se. I think it's still pretty sparse. But I think what it is important to dissect in the average sales price is obviously the composition has shifted. We're seeing, again, people are gravitating towards bigger homes. Just in general, bigger condos, bigger townhouses, bigger single-family houses. People want more space, so naturally that's going to skew the average sales price higher. So again, I would take that number with a grain of salt. Again, I think the average sales price is what it is. I do find it interesting though that I think that's what CMHC, for example, was basing their predictions, for a 9 to 18% decline. That number was always off the average sales price. So, obviously it's actually flipped in the complete opposite direction in terms of the average sales price moving higher. But again, I would take that number with a grain of salt. Unfortunately, we don't, that's why it's hard to track house prices in real time, because it's not like a stock where you can just look at it and say, okay, and same thing with the home price index, which is what, the real estate boards will report. It's kind of a massaged index where it tends to lag by about 4 to 5 months. So it doesn't really tell you what's happening in real time with house prices. It's more of a lagging. It's basically looking in the rearview mirror. So, what we can say is looking again at, supply, the number of inventory, what houses are selling for in real time. Detached house prices are moving higher. In the suburbs, they're moving up substantially. They're probably up at least 10% since COVID, which again is certainly a head scratcher. If you'd gone back in March or April and when we were shutting down our economy, if you had said to somebody, hey, what do you think? I think house prices will be up 10% in 6 or 7 months from now. I think people probably would have looked at you would have looked at you sideways. But again, here we are. That's why I think it's difficult to predict human behavior. And human behavior right now is saying, well, I actually want to take on more debt. I want a bigger house, and I'll worry about the cost tomorrow. So that's kind of what's happening.
With the spike up in home sales and prices, how far are home prices away from the 2016 market top?
Yeah, I think we're still a little ways off. Obviously you kind of had a blow off top, but you had a blow off top in 2016, particularly in luxury homes. Much different dynamic. 2016, we had a flood, a tsunami of offshore money coming into the market, which for anyone paying attention, could plainly see. And that was really driving, we obviously had, West Vancouver hitting all-time highs, that luxury property market, the west side of Vancouver. Very, very expensive home selling. Today, what we're seeing is the market is being driven by local end users, particularly families that are, well established in their careers. They haven't been impacted from a financial standpoint, in terms of their jobs. And these people are obviously, sitting at home now with a couple kids, and they're working from home. Maybe the kids are studying, at home as well, and they want more space. So that's what's driving the market today. It's local end user market. We don't have any real overseas money coming in. Well, A, because the borders are closed to begin with, and B, it's not an investor driven market. In fact, if you look at the number of homes bought and resold, aka flipped, the number of homes being flipped within a 2-year window has collapsed. It's collapsed to, I think, multi-decade lows. So you don't have this speculative fever where people are buying homes to flip and resell. You have people that are buying larger homes to live in today. And that's evidenced in the data. So it's a much different dynamic than 2016.
And much like after major power outages, like the famous one in New York back in the 60s where there was a baby boom 9 months later, are we going to see the same thing here with couples put together during pandemic lockdowns?
Yeah, that's a tough one to say. I don't know. I think that people are obviously a little bit more scared with their finances. So I don't know if that's going to, shift it on the other side of that. But I do think that, maybe I'll make a prediction here, but I think that we will see some form of universal basic child care here in Canada moving forward. I think that the Trudeau government has already sort of hinted at it, and I think that they have the NDP, and I think that's coming. And I think if you look at the declining birth rates over the last, decade or so, I think it's pretty obvious what needs to be done to turn the tides there. Just the cost of living is too expensive. The cost of raising children is too expensive, and so that's why you're increasingly relying on immigration flows. So you kind of have to, if you want to stem the tide, I think you have to almost bring in incentives to get people to have children.
With home sales and prices rising during the pandemic lockdowns, where's this money for real estate, especially the high end, coming from?
I think people have a lot of equity that's been built up in the housing market. They're leveraging it up. I think that the banks are happily lending money today. something I've talked about on the show many times. Something I've been quite vocal about. As again, we look back in April, the sentiment back then was, the housing market would probably tank. Banks would constrict credit. And what we've seen is the opposite. Banks are not constricting credit. They're happily lending money into the residential housing market. Obviously, that is heavily supported through the central banks, through their QE programs. I think the Bank of Canada's balance sheet's grown by 400%. So that's obviously providing the backstop to the banks to continue lending. And they're happily lending against residential mortgages because if you think about it, in essence, they are essentially backstopped by all levels of government. It's almost a policy. It's almost a mandated policy that house prices are not allowed to decline in Canada. And I think that the banks are obviously aware of that and they're lending money.
We'll have more with Steve Saretksy right after the break.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretksy. Steve, in the Vancouver area, is this a good time for real estate investors to be buying or selling?
I don't think you're getting many deals. I think there's some better deals and opportunities in the downtown market. I mean, that's probably, realistically, that's probably the only market that's been, hit pretty good. I mean, since COVID, you probably have condo prices in the downtown core. They're probably down about 10%. Now, again, that's not going to show up in the official data because, again, as I mentioned earlier in the show, there's no real-time data to say prices are here or prices are up or prices are down. It's kind of, you're going to look in the rearview mirror 12 months from now and say, oh, yeah, there was a 10% correction in downtown condo prices. What I can tell you today is from a feet-on-the-ground perspective, looking at what's happening in that market, is prices are being discounted. Sellers are dragging their feet, obviously reluctant to cut their prices, but the people that are selling are taking substantial haircuts. So again, if you contrast that to the detached single-family housing market, which is up, again, about 10% since COVID, versus the downtown market, which is down 10%, that's a substantial swing. So I think there's some interesting opportunities emerging in that downtown market. Now, do I think that there's probably a little bit more downwards pressure on prices? I think that's a realistic probability. But it's not often, obviously, where you get 10% pullbacks in the Vancouver market. Again, maybe that turns into 15 or 20%. But certainly, I think it's creating compelling opportunities.
Are mortgage deferrals ending, and when they do, what happens?
Yeah, the mortgage deferral period is ending. Obviously, it's going through that ending process right now. So we should, by the end of this year, end of December, we should have pretty much, for the most part, these deferrals should be coming off. They should be having to resume payments. So if we look at the official data from the Canadian Bankers Association, as of the end of September, at one point, this is important to contextualize, at one point or another, mortgage deferrals hit 16%. So 16% of all mortgages outstanding at one point or another had received some form of deferral. That doesn't mean they had a 6-month deferral. It could have mean that they just had a 1-month or a 2-month deferral. So obviously that's a substantial number. Now, a lot of people took them that didn't necessarily need them. What we can see is at the end of September, that 16% number has now gone down to 6%. So 6% of mortgages are currently in deferral. So it's still a very high number, because if, 6% or 5% of those, I think it was, there was a study out there that if 5% of mortgage deferrals, turn into delinquencies, that you would have a substantial amount of inventory coming onto the market. So I think that's a number to keep watching. But unfortunately, we probably won't have a really good number on that until the end of the year, we'll see what those deferrals look like. But today as of the end of September, they're at 6%. So still running fairly high, but not catastrophic, in my opinion.
Were some people taking the deferral and taking the money they would have spent on their mortgage and used it for something else, paying down debt, or just upping their savings account, their tax-free savings account?
Yeah, I think that there's some numbers out there. I've read all the reports and looked at the numbers, but I don't have it in front of me. But if you look at it, the fiscal government, the federal government actually overcompensated for lost income. So there's some good data out there. But, through the CERB checks and all these other benefits that came through, they actually overspent. They overcompensated for lost income. So, again, if you want to wonder why, where all the delinquencies are, again, they're probably still coming, but people are surprised with the V-shaped recovery in retail spending. They're surprised by the resiliency in the housing markets. Well, again, you have to look at all these fiscal programs that brought in. Unprecedented amount has been deployed into the markets. Again, with the Bank of Canada's QE program, those two measures combined, in my opinion, have probably overdone it. And now we're talking about massive deficits, modern monetary theory, where the Bank of Canada now owns 35% of the Canadian bond market. And at this pace next year, they own 50% of the bond market. So, massive intervention from all levels of policymakers. And I think that's certainly helped cushion the economic pain, for households and businesses.
Does the real estate market need more immigrants to keep prices moving higher?
I think so. I think that, you can see what the Trudeau government is doing is obviously, I think they were announcing in the past week or so, they've announced that they're going to ramp up immigration targets, in 2021, 2022, and 2023 to basically try to play catch up, so to speak. They've also brought in a program now where they're saying, okay, we have just over 1 million temporary, migrants here, workers, students, that sort of thing. But we're going to actually ramp up their approval for permanent residency because we don't want them to leave Canada. We need them staying here. We cannot have more outflows in terms of immigration. And obviously, I think a lot of that it has to do with supporting, which is our largest part of the economy, is housing. And I think that's and the way I read that and say, well, if you're trying to ramp up those numbers at a time when the unemployment rate is at 9%, there's obviously a hidden mandate here, which is we need to support the housing market. We can't have rents falling by 15-20%, year over year. So that's it is what it is. It's Ponzi by nature, but that's certainly how they've built up these programs.
If the COVID narrative ever ends, are we likely to see pent-up selling hit the market?
I think it's a possible concern with, looking at maybe mortgage deferrals next year. It would be a concern if fiscal spending, fiscal support pulled back, monetary support pulled back, but I just don't see any willpower. You show me a government today, anywhere globally, that has the willpower to rein in spending. I think that we're entering a new era of fiscal dominance where these guys believe that they can spend whatever they want and need to spend with no inflation, and the central bank will simply buy up or basically help them, monetize the spending. So I don't see any sort of idea here in the next 12 to 24 months where the federal government is suddenly going to rein in spending and to get the deficit under control. I think that we're entering a new era here, and I think that that's also ultimately going to result in a currency devaluation where you're spending money with no constraint. So that's my personal opinion. And I think when you're in that era, I don't see a scenario where real assets, whether that be stocks or real estate or any sort of financial asset, I don't see how that devalues in an era like this.
The Bank of Canada is projecting their near zero interest rate policy into the future. Is this likely to provide stability for low mortgage rates for the foreseeable future?
Yeah, I mean, I think that's the thing, right? Like, as I've said, and I think anyone that was, listening to my comments here when we had these conversations back in March and April, my inclination, along with everyone else, is that it was whether you'd see a decline in house prices. But I think that we're now in this era where you can clearly see the reaction function from policymakers at all levels is to try to keep this game going. And so, when you have the Bank of Canada coming out and saying, well, we're not going to hit our inflation targets until at least sometime in 2023. So we're not going to be raising interest rates until at least sometime in 2023. So you got another three years with a zero interest rate policy. Maybe we go negative interest rates. I don't think I would be surprised one bit. I think in an era like that, where you're basically telling everyone you're going to inflation average, you're going to let inflation run hot. The CPI to begin with is a massaged index. Anyone. So these guys come out and they say, okay, well, we're going to run a zero interest rate policy. CPI is right now they're saying it's, sub 1%. But meanwhile, house prices nationally are, as of September, we're up 10% year over year. So house prices are going up 10%, but there's no inflation. To me, that just looks like an implicit currency devaluation. So not that house prices are going up because they're creating more value, I think they're going up is because the currency is being devalued. So that's kind of how I look at it personally. And if you look at what these guys are saying is they're telling you, look, we're going to try to create inflation and reflation trade.
Are we likely looking at a Japan-style scenario of low interest rates and conservative mortgage lending for a long period of time?
I don't think we're going that path per se. I don't necessarily agree with all aspects of that. I think that we're going Japan and Europe-like in the fact that you're going to have a zero interest rate policy. I mean, what have we had? We've had basically, zero rates almost for the past decade. I mean, in Canada, I think they almost hit 2% and everything started to crumble. So they've been extremely low for a decade now. I think they're going to continue to be near the zero bound for the next probably 5 to 10 years. So that'll be very Japan-like. But I think when you combine that with all the fiscal spending and the expansion of M2, the money supply, it's that money supply is much more rampant than what Japan had. So they weren't able to actually expand their monetary base. So I think it's different in that dynamic. I think that you're going to continue to see the value of assets will increase because I think that the value of the currency is declining at a pretty unprecedented pace.
Are Canadian banks continuing to be conservative in their mortgage lending, and how can housing prices rise in that kind of environment?
Yeah, I think as we kind of discussed at the onset there, I don't really think that banks are being conservative. I think that when you consider the unemployment rates at 9% and sales in Canada are hitting 10-year highs. In some cases, I think actually last month we had record high in home sales. So somebody has to lend money to in order to have record home sales. You have to have somebody lending you the money to do that. So the banks are lending money. They're not strict. I think it's pretty evident in the data. So you can say the banks can say whatever they want, but at the end of the day, the numbers speak for themselves. People aren't buying houses with cash. Most Canadians are earning, average salaries, and they need mortgages to take on these house prices, and the banks are happily giving that money out.
If the banks won't lend people mortgage money, can people look elsewhere for mortgage cash?
I suppose you could. I think that the shadow mortgage industry is obviously booming. Plenty of alternative options if you're looking for financing. So access to credit is not an issue today. Access to credit at sub 2% mortgage interest rate is not a problem.
Have the banks been bailed out during COVID by the government using taxpayer dollars?
I don't know if I'd say implicitly bailed out, but obviously, quantitative easing, These types of programs are obviously to try to support the banks, to try to keep spreads from blowing out. Things like that. Obviously, we had, the Bank of Canada come in and buy, Canada mortgage bonds, for example. That was really just in order to signal to markets that they were going to backstop that mortgage market. They didn't want, spreads on these bonds to blow out, and that obviously relates to higher borrowing costs for borrowers. That means your mortgage rate isn't 1.8%, it's probably 3.8. Obviously, we know that the housing market would be in dire straits with a mortgage rate above, it'd probably be above 2.5%. Your housing market starts to slow down significantly. So, I don't know if I'd call it a bailout, but certainly an obvious support for the banks.
Are landlords now allowed to evict non-paying tenants?
In BC they are, yeah. I'm not sure the rules for other provinces there, but in BC you can, yeah.
What's happening to rental prices, and could it affect home prices?
Rental prices are off. I think that from what I'm hearing and seeing, unfortunately in Vancouver, Greater Vancouver, we don't have any real good rental data. Unlike Toronto, where they have all the rental properties get listed on the MLS, they have data going back, 10, 15 years. Unfortunately in Vancouver, we don't really have that good data. There's some alternative sources, rentals.ca, stuff like that, where they aggregate asking prices on rents. Looks like those asking prices are down. I believe they're down between 10 to 15%, which it kind of goes hand in hand with what we're seeing anecdotally from a feet on the ground perspective. So, yeah, the rental market's definitely coming under pressure. Not surprising given household formation is slowing. Again, when people lose jobs, what do? They go back, move in with mom and dad. So household formation slows. At the same time, you have immigration, population growth contracting. So that is also another headwind for the rental market. And that's really an indicator of your real economy. The real economy is in pain, and that's why the rents are coming down. That has yet to really translate into the overall rest of the housing market. Again, maybe it's translated into, the condo market where some of these investors play, particularly downtown Vancouver. 50% of your market there is investors. So that's obviously, we can see the prices declining there. But in terms of single family houses and townhouse market, it hasn't translated. The reality is you don't have investors buying. Most investors aren't buying single family houses in Vancouver for $1.5 million and renting them out for $3,500 a month, because it just doesn't make sense. So they've never really been that active in that space.
Do you think a digital currency would be good for Canada?
I don't know if I would say it would be good for Canada. I think it's coming inevitably. I think it's just to gain more control from the central banks. The ability to have, if you have a wallet, it's a digital currency at the central bank, obviously they can just do direct liquidity injections. So in terms of, these CERB programs having to go through the mail or whatever, having to go through essentially another barrier that is the banks, you can have a digital wallet. The central bank instantly credits that digital currency wallet. That's kind of the whole notion for it. Again, if they start to expand the roles of that digital wallet, you could argue that they can easily impose, negative interest rates or deep negative interest rates on savers, because all your money is tied up with the central bank. So I think it's just designed to give the central banks more power over the policy measures.
Is the Trudeau government a proponent of modern monetary theory?
They say they're not, obviously. Krista Freeland was out last week saying that she wasn't in favor of modern monetary theory, but I think everything that you look at is that, in some form, maybe it's not direct modern monetary theory, but basically the federal government spending is essentially being backstopped right now by the Bank of Canada. As we talked about earlier in the show, the Bank of Canada now owns 35% of the government bond market. And obviously they're coming under increasing scrutiny now, from various policymakers as to, well, hold on, what's the role of the central bank here? And so the central bank actually came out about a week ago and said, okay, we're going to scale back asset purchases from $5 billion to $4 billion. I think that was really just almost save face and say, okay, like we're going to, we need to slow this down a bit because people are starting to ask questions.
If the Canadian currency collapses, what would likely happen to the price of real estate?
I don't know. That's not my base case, obviously, but I think what we're seeing is a stealth currency devaluation behind the scenes. So I guess hypothetically, you're going long a bunch of Canadian debt, and if they're aggressively devaluing the dollar, the loonie, I should say, is the value of that debt becomes almost worthless, right? So that's kind of the notion behind that. Is you're repaying a mortgage, but you're repaying basically monopoly money. That's how it would be looked at in a currency devaluation. So house prices would go up, at least in nominal terms. They wouldn't go up maybe in real, inflation adjusted terms, but they'll go up in nominal terms.
How does the government wean people off CERB money for doing nothing?
I think that's going to be extremely difficult. It's one of the things that I said is, back in March and April, is that once you introduce these programs, it's hard to wean people off. And I said at the time that these programs will be in at least until the end of the year and probably into next year. And lo and behold, I think it was in August or September where they announced the end of CERB, but they basically rebranded it into, a relief benefits, extended benefits. And then they bumped those up to $2,000 a month. So they basically just rebranded CERB, where that seems like they don't have, I think the government was saying these programs are going to be in place until at least the summer of 2021. Now again, maybe you get to the spring of 2021 and they say, well, we're going to extend them until at least the fall of 2021. And that number just keeps getting pushed back. So, I think we're in, like I said at the beginning of the show, I think we're in an era of fiscal dominance where that's, the role of monetary policy is, becoming increasingly difficult, in terms of its potence. I think that it's really going to be fiscal spending that comes and takes over, and central banks are going to help, support the fiscal side by essentially monetizing those debts.
Any thoughts on what Finance Minister Freeland might do for or to the people of Canada? No, I just think that the next move is, I just think that, I think that universal childcare is probably the next. I think that's the obvious one. I think that's probably got to be coming in the next, 24 months. I just don't see a way around it. I think if you look at the demographics of Canada, are pretty terrible. And this is happening not just in Canada but everywhere else. So this is increasing reliance on immigration. I think if you turn, and I think Krista Freeland's even written about this many years ago, that I think that we're going to see some form of child care support. Is there a push towards communism in Canada?
I think that we're obviously leaning further and further left. I think that certainly more socialist, a lot more government programs, bigger government, more spending, and certainly Canadians seem to be voting for that. So I think that we're leaning further left.
How can people get in touch with you?
Best by email, just my email, steve@stevesaretksy.com. I'm pretty active on Twitter. You can kind of follow some of my thoughts and ramblings on Twitter at Steve Saretksy.
Steve, thank you so much for chatting with us.
Thanks, Jim. Appreciate it.
My guest has been Steve Saretksy. He's a Vancouver-based realtor, and as he said, you can contact him at stevesaretksy.com and on Twitter at Steve Saretksy. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter at HowStreet. We're also on Facebook. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.